Hello friends, this is Martin from Secrets. Welcome to the Daily Market Analysis Show, and this is analysis for December 15, Wednesday 2021, where we look at what happened in the markets today and how we can look for a better trade tomorrow. So, what exactly happened? A summary of that is it dipped, market dipped today. Both indices dipped and then took the gap support and then tried to consolidate this body. Let's see what exactly happened. So, if you're not subscribed, subscribe and share it to friends. So the pre-market analysis for tomorrow is going to happen for December 15th, Wednesday, December. You'll be looking at all these parameters that we discussed here, right? On the left side and the charts. We'll also look at the data analysis and then wrap up some actionables also. So look at the candle itself. Yesterday it was a bearish engulfing pattern that you can see on the Nifty. Here also it is a bearish candle, and now today it gapped down and then took the support of the gap that we talked about yesterday. Here BANKNIFTY also we have a gap, and so 43 points lost, BANKNIFTY 30 points lost. So it is a flat day and it took its support. So basically it was a gap down on the Nifty and BANKNIFTY, and after the gap down it was zigzag movement of 150 point range, 500 point range respectively on the Nifty and the BANKNIFTY. Look at this is what happened, right? Gap down, zigzag, W. Gap down, zigzag, W. Right? Well, Japan is showing that there is contraction of the volatility that's happening, and also there is the lower band is reduced in the sense stopped expanding and then going sideways. So there's consolidation that you can expect on both. That's what Japan is indicating. Both support resistance levels here took the gap support 17200 if it is breached. Next level is 17,007 levels, and if that is broken 16900, and after that 16700 upside. You have 17500, 7600 levels on resistance, and then above that you have 7800, 950, and above that you have 18,000. Nifty, this is the gap it has taken the support, that is 600 Fibonacci 50 level, right? That full zone is a support, and if that is gone, then 35 600, 35 900, that's next one. That is going to have that is 45,000, 35,300, and that is upside. Where it is made, not resistance is at 37,000 today. That is broken. Then you have 37,400, and that's broken. You have 37,800 kind of levels, and above that you have the major zone where you have 38,000 critical. Only if that is breached, you have a up move that is going to come back. Similarly here, 17,500 and 600, that level. If we close above that, only then we'll break the lower low, lower high pattern, both in, right? For the bands, you have seen the contraction, momentum divergence, sideways Nifty and BANKNIFTY, no change, no divergences. Trend indicator DX is showing that day my crossover has happened to the negative zones on the Nifty, and BANKNIFTY condition is a bullish zones on the day my, right? Volatility is 16.9, 2.3% again dipped, right? 50.81 IVP, and then IV black volatility for the Nifty 16.73. So it is a small spike within the range of 15 and 20. Open data showing that 17,000 and 17,300 is where the action is going to be for the next expiry of December 16th, where the highest put rating is seen, and above that you have the resistance on open interest. Maximum call rating is at 18,000, and then 7,600. 0.55 put call ratio and short build up in the futures open interest data. Nifty 36,500 and 37,000 where action is there. Maximum call rating is there, that's where the resistance is there. 37,500 to 37,000 is where the call rating and the resistance is there. I'm sorry if I said that 36,500, 37,000, it's a put support zone. Maximum put rating is same there. Look at the charts on the right side. Red everywhere, all major components red, nothing green. That's why market fell. Few up moves are there in the sand level, LNT and ICICI, but otherwise overall, Bajaj Finance big selling. That's the heat map. IT flat, metal up flat, auto up 0.5%, pharma 1% up, 0.5% up, FMCG, reality 0.5% up, 0.5% down actually reality. So overall it's slightly up or down, no strong indications of performances in any of the sectors, but momentum is anyway sideways, so just can't take long trades as per the sectoral analysis. Institutional participation again, it is selling, but small selling compared to other days. Fyers continuously selling like this is really a concern, but Tango lost institutions continue to buy at the same time. Dollar index rupees weekend like anything. See 76 levels is shooting up. USD INR. Dollar index also is broken out of the major resistance and seems to be consolidating. Crude has dropped, but again from the 65 below levels, it is again spiked up and climbed about 70. As long as it's not shooting further up, it should be okay. Gold is consolidating at the, and neither ready to go up nor ready to go down since long. So this support zone is where it has spent the maximum time last several months. Below that, the US markets and the UK markets, no major indications at the point in time, except that Dow Jones yesterday had closed at 320 points down. There was red all over, but if there is, before the pre-market, if there is a big up more down more, then it can reflect in the SGX and accordingly it will reflect in our markets. So keep watch of that in the pre-market the same. How about these indices? Action was persistent systems long. Seems to be some drive move on the upside. So it is taking the moving average support and then move up, then taking the, so it's a continuous vertical up move, and every time, most of the time, it takes the moving average support. So which is surplus here, we can go for a swing trade. This is swing trades or portion trades. Again, Tata Consumer is a short. There's a channel breakdown, it's happened, and it's on the weekly. So daily, it's already bearish on the momentum. Volumes are down, and trend also is down. So that can be a short-term swing, short trade. Tata Consumer Products. Other one is Persistent Systems, which is IT sector, and it's a long trade. It's having good momentum trend volumes, and it's having a good moving average support trending up within the channel, trend line channel. So to wrap up, it's a mild bearish neutral sideways is my view. Reasons because it does fail to break out from the lower high, low pattern. But it is taking the gap support, which is good. Market is mildly bearish to neutral, that is my view. That is based on the chart patterns that we have discussed earlier. Support resistance levels, bearish momentum crossover that has happened, weak trend, and institutional buying. Institutional selling continuously. That's why there's my relation. Small in the bands indication consolidation. Then a correction, that's what it indicates. So VIX is pulled off. But there is a spike since last 2 days, but very small spikes. US inflation data is coming on Thursday. Our day, Fed meeting. US inflation data has already come. It's bad, but market did not react that much bad. Dow Jones was 300 points down yesterday, but the day it came, didn't react that much. But Fed meeting outcome is coming on Thursday. Probably the market is waiting for that. So our markets also could be volatile because of that. So play safe, 60% straight stop losses, and keeping in mind all the support resistances that we are seeing. So this is my view on the market. So hope it helps to form your own view. If you like it, hit the like button and share different colleagues. I hope you have happy trading, happy learning. Thanks for watching. Bye.